Welcome back, everyone. I hope all of you are having a great day. Today, Bitcoin seems to be stuck in that 30K range and really hasn't moved in a while. And typically, when this happens, it's because price is coiling up to make a big move either to the upside or the downside. But today, I want to go over this one indicator that will not only tell us where Bitcoin's price will be going, but also where the entire markets will be going. Now, if you enjoy the content, consider leaving a like and comment down below, and I really appreciate it. So first, let's briefly take a look into Bitcoin's price on the daily. So obviously, over the past few days, ever since the 23rd of June, we could see that we've been in this consolidation zone, ranging all the way up to 31,000 to basically 29,000. It's really important to understand that Bitcoin's price is just stuck in this zone. And typically when this happens, it's because price or momentum is coiling up in order to make a big move, either to the up or the downside. We don't really know which way it's going to break out to. But if we do take a look at where Bitcoin has previously gone or how price action acts when it's stuck in these zones, we might get a better understanding of what might happen soon. So obviously, let's just take a look back not too far. But you could see when price coils up, right? Obviously, we had this massive move to the downside. Price kind of got stuck in the zone, and then it just made a massive move to the downside. This happens over and over and over again, where you can see where there's massive moves in the market. Price kind of stagnates for a little bit, doesn't really go anywhere, and then makes a massive move either to the up or the downside, right? We don't know which side, but over and over and over this happens, right? We have a massive move, price consolidates, and then it makes a move to the upside. Obviously, recently and thankfully, prices have been making big moves to the upside. And so with kind of all that consideration, we should come to think that maybe Bitcoin's price is coiling up to make a big move to the upside. However, when we look at this one indicator that we'll talk about in a little bit, we're going to see why I think that we are going to see more of a potential downside move in Bitcoin's price. Not to be like a perma bull or anything, but I think it's also important to see other macro factors that really do affect Bitcoin's price and the trajectory of it. But what we're seeing, again, is we had a massive move to the upside in Bitcoin's price. We're consolidating in this zone in between 31.5 and 29.5. And what I think, based off this indicator that we'll go into in a little bit, I think we could get a push to the downside. Now, I don't think we're going to fall all the way back to 20K or 10K, but I think we could make a decent retracement of this move, at least to the upside. And if we look at just a 50% retracement, that should take us to at least 28,000. And I think that's a very realistic level that we could drop back down to. Now, the indicator that I'm referencing is global liquidity. Now, what I mean by this is you could see the ticker symbol right up here. Now, this is basically all of the central banks and their assets, and then it's converted into the US dollar. So you could see it's Wall Street, the Japanese assets, China's bank, Euro's bank, and then obviously we're subtracting the general account and also our repo rates. So this kind of gives us a broad look into what does global liquidity look like. And the reason that this is so important, and just to kind of confirm, global liquidity, I made the green line just to think of it as money, and the orange line is obviously Bitcoin. Now, the reason that it's so important to understand where global liquidity is going and how it has such an effect on the markets is that when you think about just Bitcoin, the S&P 500, or financial markets in general, what drives price? At the end of the day, it's liquidity, or even easier, it's just money. How much money is flowing into an asset? If you want the market cap to go up and you want the price to go up, typically you need to have a high demand, which means a lot of money coming into the system. Obviously, another way you can do this is low supply, but typically the more money you have coming into the markets, the higher the price will go. It's as simple as that. So what I've done is I've marked off 5 different areas where I want to talk about where global liquidity has shifted and the effects that it's had on Bitcoin's price and how important it is to understand that. Now, obviously, we'll look at Bitcoin's price, but I also want to look at the S&P 500 and see how the S&P 500 has been affected by that as well. So the first thing that I want to do is go into Bitcoin's price. So obviously Bitcoin being orange and global liquidity being green, we're taking a look at all of these national or major economies. Obviously there's not a few of them in there, like India's not in there and a couple other major countries, but you kind of get the point. So what we're seeing is that the first, or whenever we had this bear market in Bitcoin back here in 2013 going into 2014, this is when Bitcoin's price started falling. Now, I understand that global liquidity wasn't as much of a factor in Bitcoin's price because institutional investors weren't coming into the market as much back around this time frame. However, it still is important to understand. So what we see is that this first mark, global liquidity was somewhat drying up. As you could see over here on the right, global liquidity was at $14.8 trillion in all financial markets. Obviously, it only went up 3.27% in the span of basically a year, 399 days. In that same time frame, Bitcoin's price didn't do so well, where you could see it dropped. It's kind of hard to tell, but it dropped from $450 to $215. So by over 50%. Obviously way more from the peak here, but this is where I really saw global liquidity drying up. So obviously Bitcoin's price did not do well when global liquidity was drying up. Now, if we kind of fast forward a little bit, whenever we started to see the bull market happen, you could see this yellow line indicates when global liquidity was starting to rise, obviously indicated by the green. As you could see the green line starting to rise, there's a pretty good correlation with Bitcoin's price as well. Now, when we had global liquidity rise to this next yellow line, we had it increase by 37%. Now, that's a lot of money because just when you think about it, it rose from 15 trillion to 20.4 trillion. That's $5.5 trillion of global liquidity added into the financial markets. Now, again, I know what you're thinking. Bitcoin was not a big asset that was getting this global liquidity because institutional investors weren't really in here. But again, look at the correlation. Whenever global liquidity started to enter the markets, that's also the same time Bitcoin started to rise. Obviously, you can correlate this with, okay, the Bitcoin halving happened in right around this time frame in 2016. So that was obviously the catalyst, but bear with me as we start to get into more of the later dates, because this is when we really start to see institutional investors get involved. Now that we kind of know the concept, I'm just going to go a little bit faster in this. So obviously, right here, we see global liquidity drying up all the way from the top to the bottom right here. You can see global liquidity left the markets. It left over $1.4 trillion. At that same time frame, Bitcoin's price dropped from 10 or 11,000 all the way down to 3,000. So obviously, we had that massive drop, and this was the 2018 bear market. Now, this is the point when people start to somewhat believe that, okay, this is actually when institutional investors started to get involved into Bitcoin, which was the early bull market of 2020, right around here, that Bitcoin's price basically went from 5,000 to its all-time highs of 69,000. At that same time frame, when we look at global liquidity starting down here, indicated by this yellow line, on February of 2020, global liquidity skyrocketed, and more than almost any time in history because of the global pandemic. We had all those stimulus checks coming from 19 trillion all the way to the peak of this yellow line to over almost 30 trillion. So you could see that the market added almost $10 trillion in global liquidity. In that same time frame, this is when Bitcoin hit its all-time highs, going from the lows of $5,500 all the way to our all-time highs of 69,000. Now, I don't remember how much of a percentage gain that is for Bitcoin because whenever I do this, it kind of goes to the right pane, so it only takes in this account. I'm sure there's a way to look at it, but you know that there was basically a 300% gain, or kind of a 3 to 4x on Bitcoin's price. Now, when we had those recession scares in the start of 2022, obviously the FTX collapse, the Three Arrows collapse, obviously there's a lot of other factors that took into account in terms of Bitcoin's price dropping. But isn't it interesting to see that global liquidity was also starting to dry up in the markets at the same time that Bitcoin's price was dropping, right? All the way from here, when we take a look from the top to basically where we are today, we've seen over 15% of global liquidity leave the markets, which is an equivalent of $4 trillion. In that same time frame, Bitcoin has dropped from its all-time high of 69,000 all the way to the lows of 15. So we've seen a massive drop in Bitcoin's price. Now, that leads us to where we are today and why I think we could see price falling in terms of Bitcoin instead of going up. So we know that right around here, 31K is a massive resistance for Bitcoin. And it's been having a lot of troubles breaking above. And if we take a look back in the past, obviously this is a very, I can't really do it right here, but as we know, it's a very difficult zone for Bitcoin to break. 31K is a very strong resistance. But when we take a look at what's happening to global liquidity, and we've seen how it correlates very well with Bitcoin, we're seeing that global liquidity is actually showing that it's pushing to the downside. Obviously, a lot of this happens because as interest rates need to go up in the markets to fight inflation, almost every country is needing to tighten their monetary policy, except for China. China is kind of on the other end of things where they're probably going to start stimulating their country. But again, we're seeing global liquidity start to move to the downside. I mean, just from here, from April 10th, which is just around 3 months ago, we've seen over $1.5 trillion leave the markets. But in that same time frame, we've also seen Bitcoin's price go to the upside. So there's somewhat of this divergence in the markets where we're having assets like the S&P 500, the stock market, and Bitcoin go up in price, but global liquidity is leaving. And at the end of the day, you need money in the markets in order for these assets to go up. So what I'm seeing is that global liquidity is leaving, and I think eventually the momentum is going to dry up and Bitcoin's price is going to fall and follow where the money goes, because at the end of the day, that's what happens. Now let's take a look at the S&P 500 and see the correlations. I won't go into too much time in terms of this, but we'll go back to the same time frame. Now you can see the correlation that obviously back here in 2014, global liquidity was somewhat rising to the upside, and at that same time frame, the S&P was also somewhat rising. Nothing parabolic, but you can kind of see the similarities. The moment that global liquidity gets added into the markets or money gets added into the markets, both the stock market and global liquidity shoot up in price. Fast forward to March of 2018, global liquidity starts to dry up, and that's when we also see the stock market basically make negative gains in that same time frame. Obviously, we know that during the pandemic, we had a massive rise in stimulus, and that's the same time when stocks had that parabolic rally, making brand new all-time highs. During that same time frame, as we looked at in terms of Bitcoin, global liquidity starts to dry up right around here, and so does the S&P 500. But here's where you could see the massive divergence. Ever since basically the start of March, over the last 3 months, we've had the S&P 500 continuously go to the upside. However, global liquidity is contracting, and so we have this massive divergence where the S&P 500 or the financial markets are not following what's happening with global liquidity. And at the end of the day, we've seen how correlated the markets are to global money. So I think there's this big disconnect in terms of this indicator telling us where is the world's money going, and then what are the financial markets doing with that. Obviously, over the past so many years, it's followed basically perfectly to a T. But obviously now we're getting that divergence. So it's going to be very interesting to see how the markets react to this. And if we start to see kind of like a fall back to where liquidity or money is going. So that's basically everything I have for this video. And if we go back to Bitcoin's price, I think it's very important to understand if global money is leaving the markets and we know institutional investors are interested in Bitcoin, wouldn't that make sense that if money is leaving, Bitcoin's price would also fall? And we are still at least like 280 days from the Bitcoin halving. So really, there's no catalyst for us to move higher in price. While I think maybe in the short term, we could sweep these highs because there is short-term money liquidity here, I think in the long term, or at least in the next month or two, we could fall back at least to 28,000 and potentially even on the longer time frames sweep these lows and come to 25K. But again, that's why I'll keep making these videos, helping you guys stay up to date on the crypto markets and understand what's happening. But until the next video, I'll see you guys then.